And we are right here with Paul Reilly of Raymond James. And we were chatting during this event, and you said that you had started your own small business how many years ago?
Oh, my goodness. Over 30 years ago, almost too long ago to remember.
What were regulations like back then because you were in the financial world and that was what your business focus was?
It was mainly consulting, but we did have a registered broker-dealer, and very little. Someone would come in and visit, you'd talk. If things weren't perfect, they'd tell you something, you'd fix them, and you'd go on. So it wasn't overburdened at all. It was more of a positive relationship, trying to keep bad people out, but not trying to find mistakes all the time.
Which is often the accusation against FINRA, which is a big overseer for many small brokerages and businesses. We're not saying get rid of all regulation, but let's shift this to investor sentiment. What's going on with small businesses and the belief that at some point they'll have corporate tax reform, and that goes for big businesses too. Your investors at Raymond James, how are they manifesting their sentiment?
It's funny, just pre-election, it was just slightly over 50% positive. The last survey last month, 77% positive.
Whoa,
so,
that's a big jump.
And you can see it just in asset allocation. Assets are up about 20 billion, cash is down about 3. So our cash balance is down 6%, assets up 3 from last quarter. So there is a small shift. You can see a movement from cash into the market. So whether things have changed or not, the belief that it's going to or that may come along has certainly fueled, I think, this market.
Here's a problem that a lot of people see in the markets time and time again over 11 past recessions. Just at the very top of the markets, the retail investor, many of you out there are considered retail investors, finally get a little courage to come off the sidelines precisely at the wrong time. Right now we have very low fear. That means people are extremely confident and complacent. And the VIX is, just a week ago, it started to go below 10, closed for the first time at its very lowest level in history, and then bounced back still. But I can't explain to you how many times I've heard people say timing is everything, and it is the difference between salad and garbage. Where are we right now in the timing level? Because there are new reports from Bank of America that say that the high net worth clients are almost totally invested, and that is often a sign it's time to get out.
Well, the high net worth clients can take a little more risk than the average client. So, but investment is up. But I will tell you, I'm kind of really proud of our advisors, and this is the value of advice.
How many advisors do you guys have now?
About 7,400. But
huge. Are you among the largest?
Mix,
this has got to be, right?
I think we're 6th in terms of assets, and they're maybe 7th in number of advisors. But the difference is the mix hasn't changed much, just a couple of percent. So the advisors have been good about holding people in when there was fear a year ago and not getting them overly excited when the market's up. And that's really the job of an advisor, is to keep them diversified and looking long term, not short term.
I've been following you guys for a long time. You acquired Alex Brown, you acquired Morgan Keegan, but you've remained very solid. You just had record earnings and revenues. Congratulations.
Thank you, Liz.
And he started his own business, and many of you out there have either done that or would like to do it. And what we see on the screen here is that Donald Trump, his daughter Ivanka, and of course the small business chief, Linda McMahon, are trying to make that easier for small businesses, which are very much the backbone of the United States economy. Good to see you, Paul Reilly.
Good to see you,
Raymond
Liz.
James.